Mike, you've obviously come from a banking background. You've been working with corporate and commercial functions. So you've been building those. I know that you have built, for instance, Santander to be a £25 billion asset portfolio, which is huge in itself. What is your take on currently at the moment in terms of interest rates? Do you think, how should businesses be thinking about interest rates at the moment? There's obviously a lot of talk around whether it's going to go up or whether it's going to stay the same. How would you be thinking about interest rates if you were running a business at the moment? And what would you be saying to any other business leaders right now?
Yeah, so absent a crystal ball, I don't really know. It's you can't. The economy is going to need an awful lot of stimulus over the next number of years, even from where it was. So we hadn't really got rid of all of the quantitative easing from last time. As we come out of this pandemic, and as we stand now, there's still an awful lot of people furloughed. No idea whether there's a job to go back to. So what happens to unemployment, I don't know. We It's uncertain, even with the vaccine, whether we get COVID under control this year or even next year. So huge amounts of uncertainty. So I think the economy is going to need quite a stimulus to get it going. That would suggest that the likelihood of a rise in interest rates is slim. However, there is a school of thought that says the only way out of the amount of government debt that's been taken on across the globe is to actually inflate your way out of it, and kind of inflate the economies to be able to deal with what is a relatively lower amount of debt. Now, I'm no expert in this, so I don't know how that would work. It sounds like there's an awful lot of risk in that, but you could see a surge in inflation and interest rates after that. So interest rates could rise. So my advice would always be, if you're borrowing money, is to think about the most appropriate way of fixing the cost of that money for the period through which you're going to borrow it. So is that a fixed rate instrument that you take? Is it a hedging product from the banks that will allow to cap the rate of interest, but try not to expose a business plan to what could be rapid rises in interest rates? Because if the likelihood of that happening is low, then the cost of insuring against it will also be low. And therefore, I would say, for a peace of mind, it's worth doing that. For instance, you wouldn't take a risk on fire insurance on your property. So why would you take a hedging risk against interest costs on your business?
So if you enjoyed this content, please don't forget to like, share, and subscribe for conversations just like this.